Breaking news on Martyn Lucas Investor. We are looking at SPCE Virgin Galactic today. We're going to be looking at the chart and how this reverse split is going to affect the chart. We're also going to be looking at some news and AI model that will tell us more about what's going to be happening and how to be trading it on its first week of the reverse split, what my targets are going to be as well. So thank you for joining this video. Please do watch until the end because I'll be showing you something special at the end as well. Do please hit the like button if you haven't already to show the support for the SPCE community. We do, I do, Martyn does, we love Virgin Galactic, we want to see it succeed. There are a few things that we would love to change about the company, but Martyn's been covering this from the beginning, so please do hit that like button and so show some support for Martyn for everything he's done for the SPCE community. So the price of SPCE currently is 68 cents. If we look at the 5-minute chart and see what happened in the after hours when it got announced, we had the biggest ever 5-minute candle to the downside. We had a movement of 30% in a 5-minute candle. If we move over to the 1-minute time frame, you can see most of that was within the first minutes of that news coming out. So within the first 1 minute, the stock fell. In 1 minute, the stock fell 18%, and the next minute, as a total, it fell about 30%, which is absolutely crazy. There was people on the sidelines waiting for that news to come out, shorting the stock, a bit of manipulation going on there, an absolutely amazing value to be buying the stock at, in my opinion. Again, I'm not here to give financial advice, but that price drop was an area where a lot of money could have been made. So yeah, it dropped as low as just under 60 cents, about 59 cents that price hit, and we did have a buy level set up at 65 cents. So the next day we actually made a profit of 21%. That's why I have these levels set up. That's why I keep saying it's all about levels, and the reason it's about levels is because you can buy at a level and sell at the next level and keep adding to your long-term shares, or just trade it however you want to do it. There's a way of buying at a certain level, having limit orders set up in case of news like that, where you can sell, reevaluate, take those profits and see where you want to buy back, or just take your profits and go. Again, I'm not giving financial advice, it's just my strategy. So yeah, we're currently at 68 cents. My buy target was 65 cents. We've already hit that, so I'll be careful about that area. Again, all of this chart's going to change. There's a reverse split being announced, so I will talk in terms of percentages right now, because the next time I do a chart video, it's not going to be under $1. So yeah, there might be, what I'm expecting is at some point a 23% move upwards from the price we are at currently, more of a midterm target for me, and sort of a worst case is that 50 cents level right now, and to the downside from now, that's about another 27% move to the downside. So again, you can play it both ways. It might go to the upside first, it might go to the downside first. So I would have limit orders set up at the 50 cents level now, where it's going to be about I think it'll be at about the $10 mark, which is about 27% down from where it is now. And then again, my sell level will be about another 23% up, and that's more of my sort of short midterm targets. My shorter term targets are about 6% to the downside, and about 10% to the upside. If we go over to the news about this split, we can see what the AI model has to say about this, which is Virgin Galactic Holdings recently announced a 1-for-20 reverse stock split, which became effective on June the 14th, 2024. We haven't seen the updated charts. That will be in the week going forward. What this means for the stock: the reverse stock split consolidates every 20 shares into one, reducing the total number of shares outstanding and proportionally increasing the share price. This move aims to boost the per share price of price to meet the New York stock exchange minimum bid price requirement for the continued listing. We knew that this was coming. We knew that they had the meeting on this. They haven't left it too long for it to be under $1. They're actually planning on it before it went under $1, or at least for an extended amount of time. And now the announcement came with a 20-1. People are taking that as bad news just because they might be overdoing it. However, it means they hopefully won't have to do it over and over again. Over this period of getting to Delta, we might see substantial price decreases and sideways movement. In my opinion, so do be careful with the stock. It's not a guaranteed way to make money. No stock is. Impacts on the company. Regulatory compliance. The primary goal is to maintain compliance with the New York Stock Exchange listing requirements with I can't even say that was a minimum share price. They have to stay above a minimum share price. Market perception. Reverse splits can sometimes signal financial struggles, potentially causing investor concern about the company's health and future perspectives. Impact on investors. Share value. Investors will see an increase in price per share, but the total value of their holdings remain the same. Immediately after split, for example, 1,000 shares at $1 will become 50 shares at $20 each. So don't be alarmed when you see all your shares drop by a factor of 20. You've still got the same amount of money invested in SPCE. Fractional shares. No fractional shares will be issued. Instead, stockholders entitled to fractional shares will receive a cash payment based on the post-split share. So be wary of that as well. That might happen on most exchanges. Market sentiment. Initially, the announcement led to a drop in share price, including market skepticism. Investors need to monitor how the market adjusts post-split, which can provide insights into investor confidence and stability. Strategic context. Virgin Galactic is navigating a challenging market environment, and the reverse split is part of their broader strategic initiatives. The company is focusing on advancing its space tourism business and aims to use this restructuring to stabilize its stock and prepare for future growth. In summary, the reverse split for Virgin Galactic is a significant move to comply with listing standards and stabilize its stock, though it brings mixed sentiment regarding the company's financial health and future perspective. Investors should stay informed. The impact on short sellers, short position adjustment. Short sellers will have. So I heard some people saying this will affect short sellers. There's a lot of short sellers. It won't affect short sellers. Short sellers will have their positions adjusted just like the investor, and proportionally. If an investor was short 2,000 shares before the split, they will be short 100 shares after the split, with the value adjusted to reflect the new share price. Potential short squeeze. Reverse splits can sometimes trigger a short squeeze if the adjusted share price becomes more volatile, making it riskier and more expensive to maintain short positions, but it won't because the price is going.
Ed Spitzer donated $1.99 through a super chat. $Wrap Technologies.
Thank you, Ed Spitzer. The adjusted share price becomes more volatile. Just to go on this point of the short squeeze. The adjusted price shouldn't become more volatile as the price is increasing. So that's one thing to take into account, but who knows? Impact on the company. New York Stock Exchange compliance, a primary goal. We already covered that. Market perception. While reverse splits can signal financial distress, Virgin Galactic aims to stabilize its stock and set a foundation for future growth. I want to ask it one more question and see what it thinks about why such a large reverse stock split. Is this bad that it is 20-1, or is it normal? Sorry for my typing on a keyboard I'm not used to. So here we go. Virgin Galactic decision to implement a 1-20 reverse split is indeed significant, and there are several factors that might justify such a large ratio. Compliance with listing requirements. The primary reason for we've already a high ratio helps ensure the post-split share price is well above the minimum threshold, reducing risk of future non-compliance. They don't want to have any problems with the New York Stock Exchange again. That's one reason. Two, But does that mean that they're expecting it to go down that much, or are they just planning so that they don't have a problem with the stock exchange again? That's something you should ask yourself. Number two, market perception and stability. A higher share price post-split can improve market perception, as very low share price are often associated with companies in financial distress. This can attract institutional investors who have restrictions on purchasing low-price stocks. A very, very interesting point there. It's basically saying maybe Virgin Galactic's management made a good decision. I know it's crazy to say, but maybe they have. Maybe they did it so it doesn't look like a penny stock anymore. So it doesn't have the chance of going under $5 and being classed as a penny stock. So institutions that don't even take a look at stocks under $5 might take a second look at Virgin Galactic. Maybe it looks like it's a proper space company that's not trading at $1 or $5 or $4. It makes it look like a proper company. Number three, reducing volatility. A higher stock price can reduce volatility, making the stock less attractive to day traders and short-term speculators, thereby potentially stabilizing their investor base. Is 20? I asked, is it bad or normal? So it's not common, but it's but not unprecedented. While 20-to-1 reverse splits are relatively large, it's not unprecedented. Reverse splits are typically seen as a last resort to prop a sagging stock price, and ratios can vary widely depending on company specific needs and goals. Ratios like 1-to-10 and 1-for-15 and even 1-for-20 are used when the companies need to make significant impact on their stock price. Looks like they're worried about the stock price after all. Looks like they care about the stock price after all. We'll have to wait and see if they implement some management changes that will really show that they're trying to turn the company around. Implications such a large split can be perceived as a negative signal indicating company has been struggling to maintain its stock price. However, it's also a strategic move to ensure compliance and potentially attract a different class of investors. So that's the news. So that's what's happening with SPCE. We're all going to see a change in our investment portfolios. So with the amount of shares. So I wish you all good luck. There will be more videos up here and over here and over here. Please do take a look at them. I forgot what I was going to say, but I think I shared all the information there with you. So if you did enjoy the video, please leave a like and a comment. Until next time, take care of yourselves and each other.